In this series of videos, we're going to go through a monstrous, really long job order costing problem. We're going to do lots and lots of journal entries. We're going to do lots of T accounts. We're going to prepare financial statements. This is a very comprehensive job order costing problem. Now, it's great that I'm doing it on screen. It would be even better if you took the problem. It's posted right below this video. If you printed it out and tried to do it on your own, even without watching the video. Then come back and watch the video and see how you've done. Anyway, let's get started and read through the problem and work through the problem together. Just getting my inking tool ready. So the problem says, the Smith Company uses a job order cost system and applies manufacturing overhead cost to jobs on the basis of direct labor cost. Now, already there's an important bit of information. I'm already thinking about this concept called the predetermined overhead rate. And we all remember that the predetermined overhead rate is calculated as estimated overhead divided by some sort of, and I'll call it estimated base, but it's the basis for which we apply our overhead. And again, if you're not sure what I'm talking about here, go back to my previous video. I think I do a decent job of explaining the predetermined overhead rate. Anyway, our estimated overhead divided by our estimated base, I'm having some problems with my clicker, is the formula for predetermined overhead rate. And it says, Smith Company uses job order cost system and applies overhead to the cost of jobs on the basis of direct labor cost. Okay, so our base is going to be direct labor cost, and I'm going to keep that in the back of my mind. At the beginning of the most recent year, the following estimates were made as a basis for computing the predetermined overhead rate for the year. Manufacturing overhead cost, $340. So our estimated overhead is $340,000. Direct labor cost, well, we said that was our base. Direct labor cost is $170,000. And I can do this in my head. I get $2 per direct labor dollar. Now, what does that mean? This is our predetermined overhead rate, and it's going to come in handy in the question. This means for every dollar my company spends on direct labor, we estimate that we're going to spend $2 on overhead. In other words, for every direct labor dollar I spend, I'm going to apply $2 of overhead cost to the job. Remember, we know our actual labor. We're always going to know our actual materials, but we have to guess or estimate. Probably guess is a bad word. We have to estimate our overhead based on some sort of calculation. And in this case, we use the predetermined overhead rate. So we're saying for every dollar we spend on direct labor, we're going to spend $2 on overhead. Okay, anyway, that's kind of nothing to do with the start of this question, but we'll probably use it near the end of the question. Let's read on. The following transactions took place during the year. Note, all purchases and services were acquired on account. When I read that, I'm thinking no cash, right? If we do something on account, it's going to involve account payable, accounts receivable, not really for cash. So I'm keeping that in mind if I have to do some journal entries here. So raw materials purchased on account, $150, and there's a bunch of transactions here. So let's read down. It says part 1, record journal entries. Okay, let's record journal entries. So let's do A through K, and we're going to do a lot of journal entries here. Raw materials purchased on account, $150. Okay. You know, you thought, oh, I'm in management accounting, no more journal entries. You thought wrong. We're doing journal entries from day one. So let's do A1A, and we're going to do a journal entry to acquire some raw materials. So when I get raw materials, when I buy an asset, I debit that asset. So I'm going to debit raw materials inventory. Can't remember how much. 150 grand. Debits on the left, credits on the right, of course. And I'm going to credit, well, if I bought raw materials inventory for cash, I would credit cash. But I didn't buy them for cash. I bought them on account. When I buy something and I don't pay for it right away, that's accounts payable. I abbreviate that as A/P, and I always like to write credit accounts payable because you feel like you're writing the word crap all in capital letters, C-R-A-P. Makes me feel very naughty. $150,000 in accounts payable there. So far so good. Let's carry on. It says part B, raw materials were requisitioned for use in production. Okay, so I want to remember another thing. When we have inventory, it goes, I shouldn't have put a W there. It starts as a raw material. It transforms into work in progress or work in process when we start working on it. And eventually, when we're done working on it, it becomes finished goods. So when we buy our raw materials, that's what they are. They're raw materials inventory. As we start to use them, they're going to become WIP inventories, work in process inventories. And when we're finished with them, they'll become finished goods. So raw materials were requisitioned for use in production. Direct materials. All right, direct materials, those are going to go right into WIP. As soon as we start using them, they become WIP. Indirect materials, though, will be counted as manufacturing overhead. And if you're not sure what makes for manufacturing overhead, it's all of those indirect factory costs. Indirect costs that occur in the factory or in the place where we do our, make our product. Okay, so 108 and 32. So let's do that. B, I'm going to debit WIP for 108,000, and I'm going to debit MOH. Maybe I should be specific. I'll call that WIP inventory. It's work in process inventory. I'm going to debit MOH, manufacturing overhead, for 32,000. So those are two debits. I'm missing a credit of 140,000. I think, okay, what's my credit here? And my credit is to say, well, these aren't raw materials anymore. They went from raw materials into work in process. So again, they transform from raw materials, they go to WIP, then they're going to go to finished goods. Well, if I requisition, and requisition just means we took it out of the warehouse and we started working on it. We requisitioned, we requested to get it out of that warehouse where we just keep our raw materials, or that back room where we keep our raw materials, and we started working on it. The 108 grand, we know are direct materials, they're part of the product, we put them into WIP. Those indirect materials that we don't put right into the product, or maybe it's like lube for the machines or cleaning supplies for the factory floor, or other indirect costs, we put those into overhead, and we've done that. Debit WIP, debit MOH, credit raw materials inventory. All right, I'm going probably too slow, so I'm going to just keep moving. Advertising costs were incurred, 35 grand. Okay, so I've got to say to myself, what is advertising cost? Is it a direct material? No, no way. Is it direct labor? Absolutely not. If it's direct material, direct labor, direct costs go into WIP. Then I'm going to say, is it an overhead cost, an indirect factory cost? It's not that either. It's not a factory cost. It doesn't happen where we do production. Advertising is a selling cost. And as soon as we have a selling or administrative cost or an R&D cost, something that happens outside of our factory, we just consider that a normal period cost. It gets expensed. So when I have, again, if it's not direct material, direct labor, or overhead, I just look at the name of the cost. In this case, it's advertising. And I go, okay, that's advertising expense. So I'm going to debit advertising expense. And I think that was for 35K. My credit here, I would normally say, oh, I pay my advertising company cash. Well, we established in the question, nothing's for cash. Oops, got to go up further. A little further still. Sorry, I should have just gone up for the top. It says everything we purchase, services were acquired on account. So all purchases and services were acquired on account. Advertising is a service. It's on account. So I'm going to credit AP, my good old favorite naughty credit, and we're good to keep going. Journal entry E. No, D. Salaries and wages incurred as follows. Direct labor, 150. Indirect labor, 90. Selling and admin, 125. Okay, direct costs go into WIP. Indirect costs go into MOH. Selling and admin costs get expensed. So let's do that. We're going to have to do 3 separate debits here. So D, I'm going to debit WIP for my direct labor. So my direct labor, my WIP cost is $150,000. Moving on, my indirect costs, we said any indirect factory cost is an overhead cost. So I'm going to debit manufacturing overhead. I think it was 75, but I just want to take another look, make sure. Oh, it's 90. I'm glad I didn't write it. My third debit is to the expense. And again, I don't want to just say selling and admin expense. I want to say specifically what it is. It's a salaries expense. So if I want to be perfect here, I'm going to say selling and admin salaries expense. And I got to tell you, when I mark my students' exams, if they don't write the word expense, I mark them wrong. If they don't write the word salaries, I mark them wrong. They have to write all of that or I mark them wrong. I'm a very mean guy. $125,000. So we got a lot of salaries, right? Like 150, 125, that's 275, 365. And we can't have 3 debits and no credit. So I'm obviously going to have to credit something for 365. Normally I would say, oh, what do I pay my employees? I pay the money. So I would normally credit cash. But in this case, they've noted anything we pay is on account. So when I pay my employees on account, I don't credit accounts payable. It's going to be salaries and wages payable. And if I had a student that just wrote wages payable, I would mark it right. If I had a student that just wrote salaries payable, I would mark it right. But salaries and wages payable really gets us to the point. All right, let's carry on. Maintenance cost incurred in the factory, 45 grand. Okay, so I got to say, what are we looking at in terms of cost? Is it direct material? No. Is it direct labor? No. Is it overhead? Well, it's an indirect cost. It occurred in the factory. That to me says yes. This 45 grand is in fact overhead. So for part E, I'm going to debit overhead for $45,000 and I'm going to credit accounts payable. Again, I didn't pay my overhead for cash. All services are on account, so assuming I brought somebody in and didn't pay their bill right away, it would be credit accounts payable. Next, F. Insurance expired during the year, 25 grand. 60% relates to the factory, the rest selling and admin. Okay. Well, the 60% related to the factory, we've got to say, what is insurance in the factory? Is it a direct material cost? No. Is it a labor cost? No. Is it MOH? Yes. So 25K times 60% means 15K is MOH. The remainder is selling and admin items. Well, that means 10K I'm going to have to expense. So let's do that. I'm going to debit MOH for 15K for $15,000. I'm going to debit the expense for $10,000, and I want to be specific. I can't just say debit expense. That's not enough. I have to say debit. What kind of expense was it? And this was on insurance expense. So I'm going to say that. I'm going to say debit insurance expense for $10,000. Now we got to say, what is our credit in this situation? What account do we need to be crediting? And the answer is, you might think, oh, credit accounts payable or credit insurance payable. And no, that's not the correct answer. You have to think back to your intro to financial accounting. Whenever we bought insurance, insurance is one of those expenses you pay for in advance. And you actually have this prepaid asset called prepaid insurance. So when insurance expires, we don't actually have to buy more until it's totally expired. As it's expiring, or as we're losing insurance, we credit prepaid insurance. So whenever you have insurance that's running out, credit prepaid insurance. And if you're not sure about that or how that works, I've got fantastic videos on just this topic, dealing with prepaid insurance. It's in my adjusting journal entries videos. If you Google adjusting journal entries TRU Tony Bell, you'll find the videos. And I think I did a fantastic job. I'm just going to keep patting myself on the back. So if you're not sure about prepaid insurance, go ahead and look that up. But for the time being, just know if insurance expires, debit insurance expense, credit prepaid insurance. In this case, though, because some of it expired on factory assets, we debit MOH for those items. All right, well, now we're cooking with gas. Depreciation recorded for the year, $90,000. 70% to factory assets, the remainder to selling and admin. Okay, 70% to factory means 90,000 times 70%. That's 63K is MOH. The rest, 30%, which is 27K, is selling and admin. So that means 27K gets expensed. So depreciation, also called amortization. I'm going to debit no, I'm not. I'm going to debit MOH for $63,000. I'm going to debit the expense, something expense, leave a little space there, for, what was it, $27,000. What type of expense is this? I can't just say selling and admin expense. That's wrong. I have to say what type of expense it is. This is a depreciation expense. All right, so there we have depreciation expense. Hope you can read my writing. 63 and 27 is 90. Now our credit here, again, I would think, oh, we're crediting payables for everything. Remember, depreciation, the only credit that goes with depreciation expense is accumulated depreciation. Accumulated depreciation. And so that's what we're going to credit. And again, if you're not sure about that, I've got great videos on adjusting journal entries and great videos on depreciation. Next up, rental costs incurred on the buildings, 120 grand. 80% is the factory. Okay, so 120 times 80% is 96K. And again, when we have these indirect factory costs, I say, oh, is rent, is it direct material? No. Is it direct labor? No. It's got to be overhead. So 96,000 is overhead. The other 24,000 is expensed. So let's go down to it. This is H. I'm going to debit. Well, what did we say? 96,000 was overhead. We're going to debit rental expense, or rent expense, maybe just rent expense for the other 24,000. And we've got to credit something. Now, here I would accept two answers. I would accept credit to, well, I wouldn't accept credit to cash because everything's on account. So I would accept either credit to accounts payable or prepaid rent. It's not really crystal clear here, but either one of those would be fine with me. Okay, let's carry on. So we're up to I, and I is the key item on this whole question. I is at the heart of the question. Manufacturing overhead cost was applied to jobs. So we got to go all the way up to the top and reread this. The Smith Company uses job order cost system and applies manufacturing overhead cost to jobs. So obviously this sentence has a lot to do with part I, on the basis of direct labor cost. And then we did this computation. We said, oh, for every dollar we spend on direct labor, we expect to spend $2 on overhead. So what we need to do here is say, how many dollars did we spend on direct labor? Well, looking through the question, we spent $150,000 on direct labor. That was our direct labor cost. Now this formula in how we're going to deal with overhead says, well, for every dollar I spend on direct labor, I'm going to spend 2 on overhead. So if I spent 150 grand on direct labor, I expect to spend 2 times that on overhead. I expect to spend $300,000 on overhead. And that's how much overhead I apply to my jobs. So going way back to the very beginning of the question, even maybe before this question, we've always said the cost of any product is the material plus the labor plus the overhead. That's the cost of a product. When we put the material cost into a product, we debit WIP. When we put the labor cost into the product, we debit WIP. Well, same thing's true when we put the overhead cost. We're going to debit WIP. So how much should I debit WIP for? Well, we've just said $300,000. So let's go on to part I. We're going to debit WIP, work in process, inventory. And we're going to debit WIP for, we just said $300,000. And we said, oh, this MOH is kind of a holding account, so we credit overhead for $300,000. Now your journal entry to apply overhead will always look the same. Debit, WIP, credit, MOH. The amounts, of course, will be different. But if you ever receive a question that says overhead costs were applied, or the company applied overhead costs to its jobs, as it does in I, the journal entry is always the same, and it's a tough journal entry. It's kind of 2 steps. You're always going to debit, WIP, credit, MOH. You got to figure out how much, and to figure out how much, you use that predetermined overhead rate. So we said for every dollar I spend on direct labor, I expect to spend $2 on overhead. We actually spent $150,000 on direct labor, therefore we estimate we're going to spend $300,000 on MOH. We're almost home now. J, goods costing $450,000 were moved to the finished goods warehouse. All right, so J, we finished $450,000 worth of stuff. Debit finished goods inventory, 450 grand. And if we finished it, it's not WIP. So credit WIP inventory, $450,000. All right, now the $1 million question, can I squeeze my next entry in here? Probably I'll need to go on to the next page. Let's do K, and we'll do it on the next page. Sales for the year were $750,000. The total cost of manufacturing these items was $400,000. Okay, let's deal with the sales first. It's going to take 2 entries. We sold stuff. We didn't get cash for it. So if I sell something, if I make money and I don't get paid for it, that's a receivable. So I'm going to debit accounts receivable. Was it 700? Should have remembered that. 750. Okay, so I'm going to debit accounts receivable for 750 grand. Now my credit here is to sales revenue, because I've earned $750,000. The final part of the entry, the final part of part K, the total cost of manufacturing these items is $400,000. So the cost of the stuff that I sold was 400 grand. In other words, I made 350, right? I sold it for 750, it cost me 4. Well, the cost of the stuff that I sold, the cost of the goods that I sold was $400,000. So my cost of goods sold was $400,000. I'm going to debit COGS, cost of goods sold, $400,000, and I'm going to credit, well, when I sell stuff, I sell inventory. Is it raw materials that I'm selling? No. Is it WIP that I'm selling? No, I wouldn't sell half finished goods. I sell finished goods. So I'm going to credit finished goods inventory for $400,000. Now at this point, we've completed all of our journal entries. We'll continue with the problem. We'll continue and do the next few parts. We've done part 1. We're going to determine if overhead's overapplied or underapplied, and deal with manufacturing overhead in the next video. In the following video, we'll do part 4. So next video will be parts 2 and 3. The final video will be part 4. That's it for now.